Hey traders, this is Christian Farmer, Target Trade Group, and this is your end of day market recap for Thursday, February 12th. Lots of red on the screen today, a little bit of a different day where it was down, down, down today and more down. I will go over just kind of the whole price action for the day and kind of a review. I'll give you my thoughts about this. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So for some reason, these videos are not streaming live to X. I don't know why. I'm trying to work out a workaround, but for now, just be patient, and they'll go to YouTube. So clearly, if you were all in utilities today, you had a pretty good day. If you were in anything else or long VIX calls, I'm joking around a little bit. Listen, you got to be a little bit light on a day like this in terms of the price action was just pretty nasty. So a couple things to kind of go over for the day. A couple of things that really stood out to me was that this is the second day in a row and a little bit different than yesterday where we started to go higher. Yesterday was a bigger gap up. And then all of a sudden, as soon as the market opened, it's just hit with like selling programs. The breadth was a lot weaker than it was yesterday. But I will say what looked a little bit different to me yesterday versus like the last couple of weeks is they really went after the small caps yesterday. Whereas if you go back to a couple of weeks ago where even, tech was weak, but the small caps were kind of holding up and outperforming. The last 2 days have been different where they've really hit the small caps pretty hard, and it was more just overall selling. Something else that stood out to me was just the overall breadth. Today was different than yesterday. Like yesterday, I was saying, I was like, what, when we usually see like a couple selling programs or like an hour of selling, I tend to look at some things for extremes. I tend to look at like where the tick index is to see if where that's at. I tend to look at breadth. Yesterday, the breadth was like was still like around like 50 up. The New York Stock Exchange up volume was about 50%, even when we were selling off hard yesterday. Today was different. It was another one of those like just hard selling type days to it. Now, a couple things that I've had in the back of my mind, and I think I may have reviewed this yesterday. Yesterday's video was that we know positioning is not very good right now for market bulls. Like we know that over the course of the last, we've heard from Bank of America fund manager survey that there's very low cash balances. We know that individual investors, retail investors are full tilt long this market. That's evidenced by the margin balances. So today, so going back to this weekend, one of the things that I read was that there's a Goldman Sachs report, and there's a few other brokers who put out the same type of information, but they were expecting a choppy market because they were saying that there's thresholds that the CTAs, again, went over this in yesterday's video, that once that breaches, their model basically has them selling equities, and that's kind of where I'm getting with today's price action. If you're looking for a reason for what transpired today, I would probably point to that it just felt like somebody was in there selling and selling all day long. And, I told my members today that I'm like, listen, I don't think that this market's going to come. I said, listen, I would love if the market rebounded today, but I was like, I don't think, the probabilities aren't. And here was the VPOC yesterday that we came down to, and there was some demand, and then we kind of hung out for the whole day. Yes, this was yesterday. Sorry, let me give you the total chart so that you could see this. But here was yesterday. We came down to this VPOC. So that was like about an hour of selling. And then that was it. We kind of just floated around for the rest of the day. Now, there wasn't any major buying there going on either. But today it was just much more severe. Right. And, you can look at the volume today. There was a big MOC sell imbalance too. So we don't know how far along these program model driven what's the word that I'm looking for, uh, program type traders, model driven traders, CTAs have to do. But I think that's one of the issues on the market right now. And when they're selling, you could see it you could see this for the first like couple hours of the day. This lasted 2 hours. right until, by the way, like what, so let me go over this really quick with you. But when I was an institutional trader, one of the largest or most frequently used algorithms that was used, and by the way, algorithms are mainly used to execute trades, right? They are used to facilitate orders. And one of the most widely used algorithms that was used was what's called a VWAP algorithm. Now, you hear a lot about VWAP these days because technical traders are now using that. They're putting that on their charts to help them. But where VWAP really originated, from as far as I know, from my trading experience, was it's a algorithm to um, facilitate orders. And when there's no preference, like when somebody's just a seller of equities, what they do is an institution will tell their broker, "Hey, I got to sell 20, you know, I'm making up numbers here, but I got to sell $2 billion today. Just do me a favor, stick it in the VWAP algorithm, and if you could beat VWAP, that would be great." So what they do is, they stick it in this algorithm that basically VWAP looks for liquidity. So it parses out a good portion of the order in the first couple hours of the day. It doesn't trade much during your like lunchtime hours. So right around like 11:30 to 1:30, because there's no volume. So it's kind of tries to source like the historical volume curve of where the majority of the volume occurs during a day. Now, also notice that sometimes it doesn't kick in until about 15 minutes after the open, and then it starts to go. So it doesn't trade much during then the middle hours of the day because there's no volume, and then it begins to pick up again. Usually around like 1:30ish. But and you could see we began to like it looked like we were going to try to turn higher here right around like about 1:45. And then what happens is like they have some discretion when they see that, when the market looks like it's going to turn, they'll kind of hit the accelerator and they'll take some out of the VWAP algorithm and they'll start selling. So to me, that's what a good portion of what happened today. Now, again, this is looking at one party in a vacuum. You don't know what everybody else is doing, but we know that there hasn't been great liquidity in this market now for a bit. So hence things are when there's a big order that has to happen, it really pushes around the market. So where does that take us to for today? So I want to go to this 1 hour chart just to rewind here. Notice how many times this week, right? We just could not break higher. Sometimes that just means that we have chop. Sometimes that means that, hey, we're not breaking higher for a reason, right? And hence we kind of fell down. Now, another thing, again, I kind of repeat some of the things, or I mention some of the things that I mentioned. Sometimes when the price action gets tight, bulls get really excited about that. But we don't always resolve higher. Sometimes we once we come out of that consolidation, we really come out of it. And hence sometimes it's to the downside. So what am I watching for tomorrow? Well, very simply, this bottom of the value area for the week. That's 681.49. And a reminder, we're probably going to have a decent day one way or another tomorrow because you have a CPI report. So maybe you see a rebound. I don't know if those CTAs are done, but that'll be a big situation. But yeah, I mean, it's unfortunate that that's just how the positioning has gone in this market. Is that there's a lot of starts and stops because this market's not breaking higher because of a few different reasons, but mainly because the positioning just is not tilted in the right risk to reward for the bulls. Now, we also know that February is a weak seasonal month. So, perhaps if there's enough longs that are unloaded, maybe this kind of gets us a little bit more constructive for the future. So that's where we are from the spies. And again, it's just kind of frustrating because we're not going anywhere. Right. And every time we kind of hang around this top of the range, we're getting smoked, right, to the downside. And then the bottom of the range, again, I don't want to jinx it, but the bottom of the range is where you will really want to be adding longs because we're not breaking down. We're just getting to the bottom of the range. Now, that's SPY. That's, the biggest index out there. Qs is kind of the scenario that we talked about yesterday that I detailed. I said, hey, we had a nice bounce here, but we haven't been able to take any of this overhead supply, which is the February value area, and we failed here. And did we ever? and back down 2%. Now, we don't know what we're going to do down here, right? This is the value, or this big gray box is the value area for the year, right? And you can see this a little bit better on the weekly chart. It's the same value area, same prices, but and my market webs indicator, market web system, I have two indicators on two market webs versions. One allows you to see the current period, and I have another one that allow you to see the current period plus the next higher one. So that's why you're able to see that on that daily chart. So I'll go back to that in just a second. But this is a big level for the Qs, right? And that's going to be 592.67. We break into that, and I'm going to say, look out, right? It's not going to be good. And I don't think that this is constructive at all. I think that if I were to short, something like I normally don't do a lot of short swing trades. Sometimes I'll do some intraday shorting. Like I think the last time I traded SQQQ, it's usually when I usually trade that, the market usually goes up. Um, but I traded it a couple of days ago when the market was under pressure, and I got out of it for small gains. But I said, hey, there's probably a good chance that we're going to go higher because I traded the SQQQ. But I will say this: I think this is the most vulnerable, and I think now folks are starting to more and more folks are starting to realize this. It's just the fact that all these names that reported earnings, the what do they like to call them? The hyperscalers or something, the Google, the Amazon, the Microsoft. They're now changing different companies. They're taking on big debt to finance the AI spend, and to me, that's changing of companies. Now, I've had a lot of questions about this from some of my traders at Tribeca Trade Group, but I just don't stay loyal to companies. I've understood. I've been doing this for a long time, and I know that companies change. When I started, just to give you a little bit of history, when I started trading, it was um, or before I started trading, when I was an intern, people were so bullish on IBM and AT&T. This is back like going in like the mid 90s. And they think that those names are going to be those names are going to be great forever. But what happens is they don't. It changes. And leaders don't stay leaders forever. And that's why I think that what we see that, and I want to be careful here because I don't want to get anybody mad, but what we see them doing right now with this capex spend is something that we've really never seen these companies do before. Hence, they're changing, and I don't think they're all trying to rival one another. So I don't think that that works out for the end of them. And what I've said is I'm been bullish about where they're deploying their companies, where they're deploying that capex, that money. So, in any event, you've heard me talk about that. I'm sorry to talk about that again, but I would really pay attention to that. Also, when I talked about the SPY coming up upon support, the Qs is not. The Qs has about another 1% down before you get to this. Again, this is just short-term support, by the way. And then I would begin to watch last week's lows of the Qs. I talked a little bit about IWM, like what's been different. I don't like this IWM at this point. Right. Yesterday we came off the lows, so it was kind of like, hey, let's see what happens after that. Well, notice now, I think you can kind of basically say, and again, it's tough because these moves are so fast that it's not really giving you a chance to sit and say, oh yeah, that was a rejection. Maybe I'll take off some risk. No, I mean these things are just going down very quickly. That's the biggest move that we've seen in IWM since probably back in here. I think that's a bigger candle than this. So there's your rejection. There's your lower high. That's not a good bullish pattern. That's a bearish pattern, lower high, and then follow through to the downside. Now, even though it's such a big move, we're still not below the lows. So, I mean, this is what makes things, kind of difficult because we're just going around this range. So even though it was the biggest red candle in a long time in IWM, it doesn't change the picture really because we're still above the 50-day moving average. It's a very odd market right now. A couple other things that we know have been kind of champions of this market, which has been RSP, started the day higher and finished down 1.3%. Kind of like my P&L for the day. Was starting off on a pretty good day, but ended pretty decently red for the day. And I would say this too. It's kind of tough. It's kind of tough holding positions with this because once there's a big down day like this, you you can't hold on to names without having a drawdown because it's so vicious to the downside. So, I again, I was saying this to members in the trading room today. I'm like, hey, I've got trades on, and I exited a bunch of them today, but it still doesn't cut off the damage because these moves are just so large. And so it's really tough to be a trader in this environment because you don't want to liquidate your portfolio every 3 days when this happens. But it's tough. A couple of the other areas that have been holding up, like DVY, that looks like a reversal pattern, right? The dividend ETF, which has been so strong. I would watch the 5-day moving average for change in tone here, but these things have ripped. They've all gotten overbought. The industrials, we can go one by one. That looks like a reversal bar. I thought Caterpillar looked like it might have been a reversal bar yesterday, but it didn't close that way. But Caterpillar's extended, so it needs some. Again, these things have been awesome this year. Let them consolidate a little bit. Same thing with Deere. Right? Look at the candle on Deere today. Try to go higher and failed. So again, these things are up humongously since the beginning of this year. Trees don't go grow to the sky. They're due for some consolidation. So, do I think that there's a changing of guard and leadership? Absolutely. Would I buy these things right here? No. I think they need to come in a bit. And I think again that's just anything after it's had a nice run. Applied Materials. Um, they wanted to sell this thing off today. Look at it. It's all the way up to 360. So again, I talked about just a few minutes ago that I would rather be in the things that is the recipient of all that capex spending by those big tech companies. So I continue to like this group, but again, you have to be careful with these things getting overbought at this point. SanDisk was a really nice trade for me today. It took out that VPOC. This was right at 666, right, and that's as far as this thing went today. So I did take off the majority of my position in here and in here today. So that worked well if you went long SanDisk, but yeah, getting thumped there a little bit right at right at that VPOC. I mentioned Google. I just want to talk, even though I'm not a fan of this, I'm still going to pay attention. It's not to say, like, even though I'm very negative about these companies, it doesn't mean I'm going to say, oh my God, I'm never going to trade these things again, right? My job is to watch to see if something changes with these things. Remember, I will always have ideas. Some people don't know how to use technical, and I'm not trying to be rude about this. Some people, they don't know how to use technical analysis, right? They really just don't know. They think that it's only news generated and you can't do much, right? That the charts aren't going to help you. That's completely wrong, right? Now, things do move on events and news, absolutely. But the technicals are still going to point you to where there's resistance, where there's supply, where there's demand. And basically, what I would be watching, it will tell me whether or not my thesis is correct or wrong. Right. So, for example, I'm not positive on these companies. Today, Google had good news. Right? They had mentioned that they coming out, like, the new Gemini model is supposed to be like really good. Right. That's what these bars were. And then what happened to it? It kind of hung around here a little bit and then went lower. So these things are not going up on good news. So right now, the technicals are confirming right now what my thesis is in the market is that these things are weak and these things are going to get sold off and rotated out of because they're spending too much money. And people just don't want to, maybe they want to own the bond, but they don't want to own the stock. It's too much risk, right? And we've seen this already with Oracle, right? With Oracle increasing their capex. So again, like you have these benchmarks, right? Oracle, which I think is a fine company, right? Software company. But as soon as they started mentioning that they're increasing their capex in here, look at what happened to the stock. It's gotten leveled. So could this play out with the same way with Amazon and with Meta and Microsoft? Sure, why not? It completely changes the whole picture. Right? Here's Meta. Here's the earnings gap completely sold. Amazon is now breaking through its major support for the year, which is 202.80. So they're completely, and I get it. Like somebody's been going around saying that they've got a big piece of what Anthropic and there's value there. Okay, but that still doesn't outweigh what they're doing on the balance sheet. So unfortunately, these companies are shooting themselves in the foot by doing this type of exercise. So that's not our problem. That's their decision. So don't fall in love with this stuff just because you think Amazon is a good company, right? It's as if, so let me try to put a nice, I don't want the video's going on 20 minutes, so I got to cut this off in a minute. But it's as if, right? Let me try to think about this. Right? If you decide that you want to get into, like, you like real estate, right? And you go out and you buy three new houses, and and you're in, like, let's say, a rising interest rate environment, and you buy three new houses and you buy them all with adjustable rate loan mortgages. Now again, I'm giving you the scenario. Please, this is not real market. And let's say that you're in a rising rate environment, right? And you bought three, you're buying three new houses, you're maximizing yourself out. Do you, and that person comes to you and says, hey, could you give me a little bit of a loan? I need a loan for a couple $1,000s, right? And you ask that person and you say, you know what? Well, what do you need the loan for? And, like, what's your, when are you going to pay the money back? Like, what's going on? Right? And that person says, I needed to buy three new houses, right? And you go over their income and everything else, and you're like, geez, that's kind of risky, right? I don't think I'm going to give you that. Why don't you go, who has the money? So and so has the money, right? Because they're doing something extremely risky, and you don't, that, whether it works out for them is a complete unknown, and going out for a couple years. Now, there was something else. There was something that Ryan Dietrich tweeted out yesterday, something that Google said, like, they don't care. They're going to try to compete to win this AI race no matter what. Does that sound something that you're comfortable with? Like, who knows who they take? They're gonna, all their profitable businesses, right? I'll give you one other example too. Meta, a couple years ago, I think this was 2022, and it was like one of the turnarounds that happened. Right, they were falling, 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 right? To 2022, all of a sudden on this earnings report, right, they had this huge decline going back from 2021 September. Vroom, missed on earnings, mentioned capital expenditures. This earnings report down here, the stock got shellacked, but they mentioned, hey, we're going to be cutting jobs, we're going to be reducing our balance sheet. What happened? Stock recovered from 90 bucks and went vertical for about a year and a half, and then kept going. Right? Why? Because they took out all the wasteful products that they were doing and concentrated on what they do best. So that's my thought on what's going on. There's other things that happened today too, which I'm not going to get into this video, but just vicious moves. It kind of reminds me of what happened, this move in CHR Robinson and some of the other truckers. It kind of reminded me with what happened with Schwab. Some story about AI, and people are shooting first and looking later. Schwab, like, I don't even know, the story the other day was about an AI model that's going to go after tax advising, and all these brokers fell down, even though it's kind of like the same thing would happen with the transports. It People are just saying, get me out of this group. It's up a lot, and there's no liquidity to support those thoughts. People are just like, I'm selling. So that's what's also making this market more difficult, is you could just come up with a story about some industry and it doesn't even have to have much validity to it, and people are going to sell these things down. Really tough situation. Again, it reminds me of companies back in the day. See, back in the day, a few years ago, when they said, when Amazon started to like encroach on their turf. Oh, Amazon's going after this type of business, right? Companies would get Amazon. Now they're getting AI'd based on it. And again, sometimes it's the same thing with Amazon. Sometimes it was like they're getting into the business, and then you learned later that it wasn't really going to affect. Like they would be saying, "Oh, we're getting into podcasts," and automatically Spotify would go down, right? And then you heard like, "Oh, wait a minute, they're really not going to affect Spotify," and then the stock would go back up. But for a couple days, the stock would get hit hard to the downside. So it's kind of the same thing that's going on, but probably on a bigger scale, which is not very good. All right, guys, that's all I got for today. We'll watch that SPY level tomorrow. We'll watch if the lower range holds again and we bounce from there.